I want a few more silver kilo bars.
Yes, yes. At the price 2 years ago.
Yes. Patrick, it's been a while. I hope you've had a fruitful month and a half since we last spoke.
Yes, I have indeed. Time flies. It's amazing, especially towards the end of the year. A lot of people are sort of cleaning up their portfolios, and obviously the market's gone wild or continued to go wild in terms of
Hmm.
pricing. So yeah, being busy, busy days, and obviously end of year is also stock take and inventory and cleaning up everything, and also hopefully some time for the family. But
Yeah.
yeah, it's I'll tell you a good one. It is now even so far that we had we have a new customer actually who joins us from Australia and is actually moving his bullion from Australia to Hong Kong for storage.
Mm.
So that'll just show you, 10 years ago it was going in the opposite direction. Even a couple of years ago, it was going in the opposite direction. But now people are seemingly moving, not seemingly, but they are
Hmm.
actually moving their precious metals product to Hong Kong. And that must be also because they perceive it to be a safe haven, which I have been advocating for a long, long time. I actually think Hong Kong is one of the best places to store precious metals for a number of reasons. But we can discuss that some other day.
So he doesn't feel safe keeping it in Australia.
Yes, yes,
Okay. Okay.
absolutely. Mhm.
Interesting. Well,
And
speak.
it's a topic for another day. I think
Yeah,
it's a pretty vast topic.
it is. Speaking of silver prices going parabolic. So this morning when I woke up, like you said just now, it was 69.44, the spot price. And which brings the gold silver ratio down to around 64 right now, which is it's been amazing because it's just as far back as what, April, May, it was over 100 and it's gone up so
Correct.
much. So, okay, to our viewers, how would you plan the portfolio for 2026?
Well, I mean, I personally, it really depends on your space, okay? Because how much space do you have to store your valuables?
Mm,
Because silver does take quite a lot of more space than gold investments do. So if you're living in a shoebox apartment in Hong Kong and you don't have a large safety deposit box, you only have a standard safety deposit box. You put two 100-ounce silver bars in there and it's going to be full, right? So it's for people like that, it's going to be a bit difficult to diversify between silver and between gold. But disregarding let's say, a limitation in terms of space, I would generally still remain along the basic lines that I personally invest in, and that's I'm usually between 2/3 and 3/4 in gold, and 1/4 to 1/3 in silver.
okay.
And I am a real disciplinarian when it comes to dollar cost averaging.
Hmm.
I don't believe in timing the market. You will never buy at the lowest low and
Yeah.
sell at the highest high, unless there's an amazing lucky strike that you get. But in general, you should continue to dollar cost average. It is a long-term investment, so please don't buy today hoping to sell in 4 weeks' time with a 20% uptick. That it's not a product for short-term speculation. Long-term investment with a 5 to 10 year minimum investment horizon, preferably investment horizon intergenerational, so leaving it for your children or grandchildren, and then just continuously being disciplined about dollar cost averaging roughly, let's say, for the retail investor, I'd probably say 3/4 gold and 1/4 silver.
Hmm.
Um, and then important again, I know I repeat myself, but it is important, especially in silver, buy the larger bars. Don't buy ounce bars. Don't buy ounce coins. Those are great gifts, but the premiums are simply too expensive on an ounce basis for an investment. If you can get 500-gram bars or kilo bars at least in terms of silver, and in terms of gold, again, the coins come with a premium that when you exit it, don't you won't be rewarded for it. So again, look at 100-gram gold bars. I know it's a lot of money now. An ounce is, where are we at 4,400? So, a 100-gram bar is 15,000 US dollars or somewhere there. It's a lot. It's more than double than it was a year ago.
Yeah.
So I know it's a lot of money, but those are the scale. That's where you get the real good price. So if you can afford it, do it. If you can't afford a 100-gram bar, then try and get the ounces at least.
Hmm.
Anything under an ounce, again, is very expensive. So, save up the money if you can, or if you have to, and really try and get to that level where you're at least buying an ounce.
Yeah. Well, this should be our mantra. Time in the market beats timing the market.
Absolutely right. Absolutely right. It for sure. And I mean, look at the development over the past 20 years.
Hmm.
I mean, I have customers that bought gold 20 years ago, it was at 500.
Whew.
Now it's at 4,400. So they're up ninefold.
Yeah.
Um, I mean, it wasn't a straight line for sure. It's gone up, it's gone down. There were corrections, there were adjustments. Yes. But that's why I'm saying you have to be long in this market, and long means 5 to 10 years at the very least.
Yeah.
But it will perform. And again, you
Yeah.
see it now. You see all the fuss that's going on in the Caribbean. You see all the fuss that's going on in the world. People are trying to make heads or tails of what the Fed is doing, what the employment numbers are telling us out of the US. Where is Europe going?
Hmm.
And in times of uncertainty, gold still performs,
Hmm.
and it is timeless. So yeah, it's the track record is there, and today again is proof in the pudding.
Well, say we have viewers who've never touched gold or silver before and they want to start today. Would you
Yeah.
recommend them the same allocation in the portfolio, 75% gold, 25% silver, or would you recommend them have a bit of money in, say, mining stocks, which have done really well as well?
Well, again, it sort of depends on your budget, right? I mean,
Hmm.
I'm a fan of the physical product, but
Yeah.
of course, I'm in that business, and it has performed really well for me and my family, and for our customers. So I'm biased, but again, if you've got $1,000 to invest, before you buy a quarter-ounce coin, you might want to take those $1,000 and put it in a gold miner or a silver miner ETF. But do look at the small print. Make sure it's an unhedged miners fund, right? If they're hedged, what's the point? It won't correlate with the gold and silver
Yeah.
price. You have to invest in the unhedged
Hmm.
mining ETFs. There also, if your risk appetite is a bit higher, there are levered ETFs out there as well on gold in particular, bull and bear. So you can, if you only have $1,000. I mean, honestly speaking, and it's surprising, $1,000 US won't even get you a kilo bar of silver anymore. 9 months ago, you could buy a kilo bar of silver, right? Now
It's
it's
two
you
two
know what
thousand
is it?
dollars.
We're
It's
at
got to be
70 we're at $70.
It's got to be
right?
2000, at least $2,000.
Yeah, it's near it probably by the time you paid your retail price, you're at 2,400 at the moment.
Oof.
So again, if your budget is $1,000 or something like that, please don't buy a 10-ounce gold bar. Sorry, a 10-ounce silver bar. It's probably going to lead to heartache somewhere down the line.
Hmm.
So if that is your budget, go look at the mining stocks. Go look at the even a gold ETF. You can buy smaller units if you want to invest in physical gold, but through your brokerage account. Look at a gold ETF. If your budget is larger, and you can afford it, I generally would say, put if your precious metals investment overall about 85% in physical and 15 in paper. And the paper position then allows you to take profits off the table when you see huge market volatility in the upward direction without having to sell your physical product, right? And then when the market corrects downwards again, you can repurchase very easily your paper position,
Yeah.
and keep the 85% physical in the safe for the really rainy day, right? But yeah, if you're a beginner and you can afford it, I'd say 85% physical, 15% paper, and of the 85% physical, again, I would, and that's what I personally do. I split it three quarters and a quarter gold versus silver. And the correlation behind that is the gold track record is just that much longer than silver
Yeah.
track record. But that doesn't mean that silver doesn't perform. As we have seen over the past 12 months, silver does also perform.
Hmm.
The issue with silver is that there is simply no supply issue for the element silver. Huge supply. There's just a bottleneck in the production of bars at the moment. So that's why, again, I'm overweight gold because gold is scarce. It really is scarce. And the silver also has a very heavy industrial usage. So when markets start to collapse, obviously industrial production also collapses, and the demand from industrial production for silver, to go into microwaves, go into phones or TVs or stuff like that, is also going to collapse. So I don't know how strong that would affect the price going down.
Hmm.
So again, that's why I'm overweight gold to a certain extent, and generally do three quarters, one quarter.
Okay, fair enough. But we've seen that when silver does correct, it corrects much more sharply than gold too. I mean, it rises a lot faster than gold, but then it corrects more sharply. So, uh, to our viewers, you should watch out for that too when positioning your portfolio. Okay, so Mr.
Yes,
Sharp, yeah. Well, I
I
could use
still
a
have to
few.
do some. I'm more of the last minute buyer.
Me too.
I'm sorry to say, and not intentionally, but I've had so much going on. I
Yeah.
quite literally have not had the time to go shopping,
I
so I still have to do that.
I know what I want, a few more silver kilo bars.
Yes, yes, at the price 2 years ago.
Yes.